Hello, my name is Sabrina and I am a narrator for this web lesson. However, the instructor is Hörra Jonasson from SUS Education. In web lesson 7, we will introduce you to home accounting in layman's terms, and we will show you how to fill out a 6-month budget. Here you can see how John has filled out his 6-month budget from July to December. We will show you revenue and cost items for this period. The first change that we can see is that John sold his car in November, and $2,083 has been added to the revenue section. Also, in December, interest has been added in cell G15. And $92 of income tax in cell G59. In November, John transferred $833 from his savings bank account 2, as you can see here in cell F16. This is because he was in the negative, as although he sold a car, he also bought another car in November for $4,167, which you can see in the unexpected costs, cell F46. Now we can look at how the 6-month averages work in the household costs section. You can see here we have filled in all the cells in the section and the averages come up here. For example, for food costs, the average in cell H25 is $295. When John went to the dentist in August, he sets this in the unexpected cost section. $208 went into cell C45. In September, October and December, John was able to save some money, as you can see here in row 42. Deposit into bank account 2, savings. Now we will examine cash flow closer. In John's account, profit or loss fluctuates over these months. We can see that in August, he has $687 in profit without cash and $42 in cash. Total is $729, as we can see in cell C92. This will mean that the cash flow changes from minus $137 to plus $592, as we can see here in C95. In profit or loss with cash, we can see that in November, John is in the minus, but in December he goes into plus. We can see that in the end of the year, cash flow in cell G95 is now plus $1,772, and in the total monthly difference in cell B101, it is $295. Finally, we will show you how you can keep track of household costs by taking into account the average of the last 6 months. Now John will make his financial budget for January 2019. He connects the 6-month budget to his monthly diary, and he fills in the estimated revenue for the next 6 months. As you can see here, from February to June, he puts $2,917 in Company 1 and $417 in Company 2. We can also see that here the averages of the household costs from the last year. For example, food costs that have been filled in from February until June are $295. He can use these averages as guidelines for his January estimations. We have now gone over how John makes his home budget. He inputs revenue and costs in the monthly diary, prepares the 6-month financial budget, and uses averages to see how much he can spend. We hope we have shown you what a useful tool home accounting is. Thank you, and we wish you all the best with your accounting.